So we were talking about question 4, that is 2012. So the question, I'm going to do question C, that is the following information was extracted from the books of Kerenga, remitted for the year ended 31st March, that is for the year ended 31st March 2012. You can see here we have sales, we have expenses, we have other items, identifiable assets, we have general assets. Additional information, you can see there you have intersegment sales for the year ended 31st March 2012 was follows. You have food products, plastics, pharmaceuticals, and we have others. Operating profit, we have it includes, so they are saying that operating profit includes 33 million on intersegment sales. Information about intersegment expenses is not available. Required segmental financial information according to requirement of IFRS 8 operating segment. So in that case, on this scenario, you can see that what you need to identify first, which are the segments you have. So under sales, you can see how these items are divided. Like now under sales, you are given food products, plastics, pharmaceutical, and others. Expenses, you have the same. Even identifiable assets, you have food products, plastics, pharmaceuticals, and others. So on that case, it means that the segment we have is food products, plastics, pharmaceuticals, and others. So those are the relevant segments you have on this question. So which means that I will do this. I will say Kerenga Remitted. That is a segmental report. It's a segmental report for the year. That is for the year ended. It was for the year ended 31st March 2012. That is for the 31st March 2012. So in that case, we have the food products. We have the food products. We have plastics. We have pharmaceuticals. So these are the relevant segments. So I would say pharmaceuticals, in short, pharma. Then we have others. Then finally, we have the total. So according to our format, remember that I said you start from sales, or you consider revenue. So you start from total sales. So total sales, according to the question, you have the relevant total sales. You have the sales. So you can see you are given the sales. So food products, plastics, pharmaceuticals, and others. So those are the figures you consider. So those are the figures you consider as sales. So I would say total sales, that is a total sales, or just segments sales. So the total sales already, I have identified them as 5650. We have a 625. We have 345. We have 162. So then we will add, that is 5650 plus 625 plus 345 plus 162. So that is 6782. So I'm getting 6782. Then now, in order to get the sales to third parties, I will subtract intersegment sales. So you will raise intersegment sales. So raise intersegment sales. So intersegment sales on this scenario, additional information number 1. They said intersegment sales for the year ended 31st March 2012 was follows. So was follows. So you are given 55, that is additional information number 1. 55, you have 72, you have 21, and you have 7. So 55 plus 72 plus 21 plus 7. So this is 155, 155. So remember that this one you subtract from the total sales. So which means that now I will get what? Sales to third parties. Sales to third parties. So that is the sales to third parties. So 50 minus 55. So this is 55, 95. 625 minus 72. That is 553. Then we have 345 minus 21. 324. 162 minus 7. 155. Then we have 67, 82 minus 155. That is 66, 27. So this one you close up to that point. Then the next part is operating profit. So you talk about operating profit. So under the operating profit, so remember that you talk about segment operating profit. You start from segment operating profit. So segment operating profit. So if you check in this question, there is nowhere the examiner mentioned that you have that relevant segment operating profit. But the examiner went forward to provide some of the items which will assist you to get the relevant intersegment profit. Not intersegment profit, but segment profit. So in that case, on that scenario, the segment profit. So the profit, remember that in order to get profit, you can take or about sales or revenue. We call sales or revenue. You raise expenses. So like on this scenario, you have the relevant sales. Like now, the first one was 56.50. So in order to get now the relevant segment operating profit for food products, you take the 56.50, you minus the relevant expenses, you subtract the relevant expenses. So the relevant expenses under that segment food products was 33.25. So to get that first one for the food products, you take 56.50 minus 33.35. So that is 23.15. So you do the same with the others. That is plastics, pharmaceuticals, and others. So you do the same. So it's all about now the first one. For example, for food products, you take the sales now, like now 56.50. You minus 56.50 minus the relevant expenses 33.25. So the first one is 23.15. Then the second one you do the same, 625 minus 425. That is 200. Then we have 345 minus 222. So that is 123. That is 123. Then now the next one is 162 minus 200. So that is a loss of 38. So you take sales minus the expenses you have for the specific segments. That is how we arrive at the relevant segment operating profit. So to get the total, I would take 23.15 plus 200 plus 123 minus 38. That is 2600. That is 2600. 2600. Then now next we have intersegment. We have intersegment profit. So you raise intersegment profit. So intersegment profit, they said under additional information number 2, operating profit includes 33 on intersegment sales. So the operating profit you have right now, the total is 2600. They mean that operating profit includes 33 million on intersegment sales, which means that you subtract that 33 from the relevant operating profit. So it was not specific but general. That's why we take it to the total. So up to that point, we have the relevant profit on sale, profit on sale to third parties, profit on sale to third parties. So we have profit on sale to third parties. So profit on sale to third parties. So in that case, 2600, we take the 2600, we minus 33. So this is 2567. That is 2567. Then now next, I can continue on this side. We have food products, we have plastics, we have pharmaceuticals, we have others, and the total. So we can continue here. So remember, after now, you have the profit on sale to third parties. You talk about other items. So other items on this case is all about expenses and what? And incomes. But now the expenses which we have not considered on this scenario, the expenses we have not considered is expenses concerning general operating expense. This one. So we have other items whereby we have general operating expense, income from investment, and interest expense. So you don't have again to consider the relevant expenses you have here, because this one have already been captured in order to get the operating profit. So they have already been incorporated because we subtracted these expenses from sales to get operating profit. So the only expense which we consider now is the other items. We have the general operating expense, income from investment, and interest expense. And you can see they are not specific to any segment, so you record them under the total column. So the first one is general. It was general operating. So the general operating. So general operating expense. So the general operating expense. So the general operating expense was 562. That one goes to the total. Sorry for that. So it goes to the total, that is 562, because it's not specific to any segment. That is 562. Then we have income from investment. So we have income from investment. Income from investment. So income from investment, that is 132. So remember that this one you subtract, and this one you add. So we can continue. So we're talking about other items whereby I've said we have general operating expenses and we have income from investment. So expenses we subtract, then incomes we add. Then the next expense is interest expense. We have the interest expense. So interest expense is again 65. So it's not specific, but a general expense. It's not specific. When I say it's not specific, I mean it's not specific to food products, plastics, pharmaceuticals, and others. So that is why we take it to the column of totals. So up to that point, we have profit before tax, So up to that point, we can get the profit before tax. So the profit before tax. So the profit before tax, remember that we have 2315 for the first one, because there's nothing to subtract. We have 200. We have 123. Then on the other side, I will take 25, 67, 25, 67, minus 562, plus 132, minus 65, 65, minus 65. That is all about, this one was a negative. Then this one is 2072. So that is 2072. Then finally now, we talk of segment assets and segment liabilities. So we have segment assets. So segment assets. So segment assets, I will check if there's anything which is identifiable. Identifiable means it's specific to each segment. So from that question, you can see that. From that question, you can see there is identifiable. You can see there is identifiable assets. These ones. So that is the identifiable assets. Then you can see we have one asset which is general. That is unallocated. They are unallocated. So the identifiable assets, we just record from the question. That is 7320. We have 13. We have the 1320. We have the 1050. We have the 665. So we can add. So that is 7320 plus 1320 plus 1050 plus 665. 65. So we have 355. Then now unallocated. Unallocated is the one which is not specific, to any segment. So the one they have said as general asset. So the one which is stated as general asset, it was 722. So 722. So that is a plus 722. So I have 11. 007. That is a 07. That is 11,077 shillings. So if you can check on the question, if there is segment liabilities, you do the same. If there was anything concerning segment liabilities, we can do the same. So segment liabilities, so if you can check here, the first one was sales, the second was expenses, third is other items, identifiable assets, general assets. Additional information number 1 was concerning intersegment sales. Additional information number 2 was all about operating profit, includes 33 on intersegment sales. So 33 was intersegment sales, the total value. Then information about intersegment expenses is not available. So which means that there was no liabilities, there was no obligations. So this company was doing very well. You would find that there's no company which misses an obligation. If Kenya itself has an obligation, which means that is the end of this question. So if there was a segment liabilities, we could have identified the one which are identifiable, we record specific to each segment, and the one which is unallocated, we record the total part of it. So you have seen how you are supposed to do this question for segmental reporting. So now to finalize on this question, we can talk about a part of it, which is a theory. So we can talk about A, which is the other part of that question. So the A part of that question, because we have done B, we have done C, not even B. We have done C. So A, they say that IFRS 8 is based on core principle that an entity shall disclose information to enable users of financial statement to evaluate the nature and financial effects of businesses activities in which it engages and the economic environment in which it operates. So in light of this core principle, that IFRS 8 requires the disaggregation of the entity's financial statements into segments required. So the other information is just they are trying to make you being confused at all. But the main thing you focus on is the requirement. What does they need? That is just a definition of what is an operating segment. So that is a segmental reporting, not even an operating segment. So the thing they are asking is define the term operating segment as used in IFRS 8. We say that a segment is any component of a business that is capable of generating revenue and incurring expenses, and whose performance is regularly reviewed by chief decision maker. You have the two marks. So that is the case. Any component of a business that is capable of generating revenue and incurring expenses, and whose performance is regularly reviewed by chief decision maker. So Roman 2, they were talking about describe the conditions that an operating segment must meet for it to be deemed a reportable segment under IFRS 8. So in order for an entity to be a reportable segment, what you need to understand is that we have 3 points under that. So this refers to a reportable segment first, refers to any component of a business that contributes. So I think you can note somewhere at this point, I'm saying reportable segment refers to any component of a business, is any component of a business that contributes at least, so it contributes at least 10% of the segment revenue. So that is the first case. It contributes at least 10% of the segment revenue, including intersegment sales, including intersegment sales. So we have said it contributes at least 10% of the segment revenue, including intersegment sales. So when I say segment revenue, including intersegment sales, that is like total sales. So 10% of the segment revenue, including intersegment sales. Another point, it contributes 10% of the segment operating profit. Contributes at least 10% of the segment operating profit. So number one, we have talked about 10% of the segment revenue, including intersegment sales. Number two, contributes at least 10% of the segment operating profit. Then number three, controls at least 10% of the segment identifiable assets. Controls at least 10% of the segment identifiable assets. So now that is the point you need to mention in order to get the 4 marks. So the conditions, that is the conditions. So 10% of the segment revenue, that is the first point. I have said it contributes 10% of the segment revenue. Point 2, contributes 10% of the segment profit, that is operating profit. The number 3, then it contributes at least, or it controls. Number 3, it controls at least 10% of the segment identifiable assets. So you have to check revenue, segment revenue, where it contributes 10%. Number 2, you have to check segment operating profit, whereby it has to contribute at least 10%. Number 3, You have to check if it controls at least 10% of the segment identifiable asset. So segments which do not meet the 10% criteria should be aggregated with other segments and referred to as others. So the ones which do not meet the 10% criteria, they are supposed to be aggregated with others. So they are supposed to be aggregated, to be summed together with, to be brought together, to be aggregated with other segments and referred to as others. So the ones which are not capable of meeting the 10% criteria are not supposed to be referred to us as segments, but they are supposed to be called others. So in order for a segment to be referred to as a segment, it must meet the points I have already mentioned. That is already, you have 6 marks. Number B of that question, part B of that question, they were saying so the part B of that question is all about advantages and limitations of the following approach of identifying reportable segments. So we have approaches. We have 2 approaches of identifying reportable segments, and these are the approaches. So these are the relevant approaches of identifying reportable segments. So what they need is all about the advantages and the limitations. Like now, when we talk about the risk and return approach, when you talk about risk and return approach, so under this approach, the segment will be identified based on different risks and the returns expected from the line of business and the geographical areas. So under this approach, segments will be identified based on the different risks and the returns expected from the line of business and the geographical areas. So you consider segment using the risk and return approach. You consider the segment you identify, or you consider the segment based on different risks and return expected from the line of business and the geographical areas. Then now advantages of that risk and return. Advantages of the risk and return. The first thing, it produces an information that is more comparable between the segments. So I think I can put them down, the advantages, because so the advantages, some of the advantages here we can mention. So advantages of a risk and return approach, risk and return approach. Some of the advantages of that. So number one, it produces an information. It produces an information that is more comparable between the segments. So the information you are getting out of the risk and return approach, you can compare them. So number two, it assists in the assessment. It assists in the assessment of profitability. It assists in the assessment of profitability. It assists in the assessment of profitability and the risks and the returns. The risks and returns expected from each segment. Then the third one, it produces an information. information. Third is it produces an information that is consistent. That is consistent over time. So disadvantages. So the disadvantages. So the disadvantages of the relevant risk and return approach. So number one, we can say it's subjective. It is subjective. That is, when we say it is subjective, it requires some of the mathematical computations. Requires mathematical computations. So the next one is defining segment. Defining segment in terms of defining segment in terms of risk and return. Risk and return can be difficult in practice. Can be difficult in practice. So it can be difficult in practice. So this was all about the risk and return approach. Risk and return approach. So which we say that under this approach, segment would be identified based on different risks, and returns expected from the line of business and the geographical areas. Then the next thing they were talking about is all about the next approach, which is called managerial approach. So the managerial approach. So what they were asking from this managerial approach, again, is all about advantages and limitations. So before we talk about that advantages, so the relevant advantages. So the managerial itself means that it's a method. Under this method, so we can say that under this method, segment is identified based on the internal organizational structure. So you identify the segment based on the internal organizational structure. You know that our internal organizational structure can be a matrix structure, can be a hierarchical structure. This one you have done maybe from strategy, governance, and ethics. So managerial approach. So you identify the segment based on internal organizational structure. So this is the approach recommended by IFRS 8. So between risk and return approach and this one, which is managerial, between the two, this is the one which is recommended. So the advantages of that, already I've written that. So advantages, number one, the cost. So the cost of providing the information, the cost of providing the information, the cost of providing the information is low as compared. So the cost of providing information is low as compared to the other risk, that is to the risk and return approach, approach. So the cost of providing the information is low as compared to the risk and return approach. Then the next point, it enables users, the users of financial statements, enable the users of financial statements to obtain understanding of the organization structure, because already we say that under this method, segments are identified based on internal organizational structure. So it enables users of financial statement to obtain understanding of that organizational structure. Then the third one, enable the company. So it enables the company, enable the company to compare, their organization, structure their organizational structure with those of other companies, with those of other companies, with those of other companies in the same industry, in the same industry. Then now disadvantages, we can mention some of the disadvantages which are the same as the limitations, limitations. So we can talk about disadvantages, then we do another question. So disadvantages. So the disadvantages, that is for the managerial. So number one, I would say that it could lead to segment with different risks and returns be combined together. So it could lead to segments with different risks and returns be combined together. Then the next one is the segmental report. The segmental report is likely. The segmental report is likely to be commercially sensitive. It's likely to be commercially sensitive because entities are organized strategically. So we have said the segmental report is likely to be commercially sensitive because entities are organized strategically. That is for the coming period. Then finally we have the segmental report. The segmental report may be difficult. So the segmental report may be difficult to compare. That is, it might be difficult to compare with those of other entities, because different entities have different, so they have different organizational structures. So those are some of the advantages and limitations or disadvantages of the risks and return approach and the managerial. So those were 4 marks, 8. Then already we have defined what is an operating segment, and also they were talking about the conditions that an operating segment must meet for it to be deemed reportable segment, whereby we talked about 3 things. The first one being the 10%. So if the relevant segment contributes 10% of the segment revenue. Number 2, if it's capable of contributing 10% of the segment operating profit. And finally, if it controls at least 10% of the segment identifiable assets. So that was the question for June 2012, question 4. So that is 20 marks for that question. So we can do another one. We can do even the one which was said retest, which is December 2017, question 5. So before I move to that question, December 2017. In case of any question, before we do another one, Dennis Michael, we have another student who's using Techno. So the one who's using Techno, you can rename yourself. So any question? You are okay? Anybody who want to contribute? Yes, you can talk. The one who's using Techno, I see you have unmuted yourself. Yes, Dennis?
I'm okay.
So we
Up
can,
to that point.
up to this point, you are okay. That is good. So we can continue with 2017. That is a question for Segmental again. December 2017, question 5. December 2017, question 5. And guys, I think you have these past papers.
Yes.
Yes, so you can even access them from the CASNEB e-portal. They are available. So nowadays CASNEB uploads them in their system. So December 2017, question 5. December 2017, question 5. So that this one. So they were talking about this is all about question 5. Question 5. So for this case, I'm concerned with question 5B. Question 5B. So you can say that you can see question 5B, Roman 1. They were saying that with reference to International Financial Reporting Standards 8 operating segment, outline 4 disclosure requirements for a reportable segment. Outline 4 disclosure requirements. 4 disclosure requirements for a reportable segment. So I need 1 point from you guys. This is something I have done. Disclosure requirements. Let me start from Dennis. Unmute yourself.
The first one is segmental revenue or sales.
That is good. Another point, so that there can be 2. Yes, Dennis?
The other one is segmental operating profit.
That is okay. So Michael? Yes, Michael? Anyway, we can continue. So this is something we have already done. Dennis has mentioned. So you have a rhyme right on what you are supposed to do with Roman 1. That is question 5B. So Roman 2 is of my concern. So the question reads, the following information was obtained from the financial records of Superfood Group for the year ended 31st October 2017. Consolidated income statement for the year ended 31st October 2017. So you are given the income statement on that case. Then you have the statement of financial position. So you can see that this is a statement of financial position, part of that question, not the entire, because it continues on the other side with the current assets. It continues on another side here with the current assets and non-current liabilities and current liabilities. Then additional information we are told, for management purposes, the business is organized into 5 operating segments. That is a retail, we have catering, we have manufacturing, we have publishing, and we have others. So details of the operating segment are provided below. So details of the operating segment are provided below. So you have the revenues, we have total revenue, we have intersegment revenue. So you can see that the relevant segments is retail, catering, manufacturing, publishing, and others. Then we have operating profit with the same segments, segment assets, and liabilities. So segment assets and liabilities, we have retail, for catering, for manufacturing, publishing, and others. Then down there, you can see you have investment in associate, which is part of. So this investment in associate here, investment in associate, which has been classified under the assets and liabilities, but under liabilities, we don't have any figure. Under assets, we have 764, which means that it doesn't lie under any identifiable segment. So investment in associate 764 will be an allocated asset. Then we have intersegment profit amounted to 4,223,000. So what you are required to do is the segment report as far as the information provided above allows, according to IFRS 8, operating segment. So we can continue. And remember that these equations is the ones which make students to pass. You can concentrate, yes, with group accounting, with EPS, with cash flow. But now if you are not capable of doing equations like a segmental report, I don't think. So once these equations, obvious, one easy equation will be in your exam. Either share-based, segmental, or retirement benefits. So if you can be able to score everything, let's say 10 marks, and the theory part of that, let's say it will be 20, you will be looking for around another 20 marks to pass, which whereby you can do even a cash flow statement, and you will be done. So let's continue. So I was supposed to do presentation of that. So because this is December, so these are December 2017 question. And I said this is the last time they said segmental report, because sitting out of the small topics, the one which appeared is share-based. Yes, share-based was question 3C. Question 3C. So we can continue now here. So this is December 2017. Question 5B. Question 5B. So they need a segmental report, and they have given you an income statement, statement of financial position, and these informations. So on this case, remember that they have provided these informations, details of the operating segments are provided below. So they have provided this information from revenue, operating profit, segment assets and liabilities, intersegment profit. Then they went ahead to provide, the first part of this question was income statement and statement of financial position. On this question, what they need is just a segmental report, which means that we will never use the income statement or a statement of financial position will not be applicable. Sorry. So the income statement or a statement of financial position will not be applicable in any way in this question. We only use the information which has been provided in the additional information. So if they could have said that we do a reconciliation statement after we have done a segmental report, is when now after doing the segmental report, I will consider what I have from the segmental report and what was in the income statement and statement of financial position with the relevant items, which is sales, profit, assets, and liabilities, so that I check if they are reconciling. So we can do it very fast, this one. So in that case, I would say the question was superfood. It is called superfood. That is superfood group. Superfood group. So superfood group segment report. So they need segment report. That is for the year. So that is for the year ended. So it was for the year ended 31st October 2017. That is 31st October 2017. So which means that you list all the segments you have. That is retail, you have the retail, you have catering, you have manufacturing. You can see them according to that information which is provided. We can say manufacturing in short that way so that there would be enough. Publishing, I would say publishing. Then we have others. I would just record others in short that way so that this space can be enough. Then we have total. So we start from total. We start from sales or revenue. Sales or revenue. Sales or revenue, or we talk about total revenue. So in that case, we have total revenue. So the total revenue, you can see there we have 129,842. We have 853. I have 39,495. I have 32,306. I have 37,447. So we can add, or we are already given the total, no? So we can add six, that is 129,842 plus 66,853 plus 39,495 plus 32,306 So 32,306, we have a plus 37,447. So I can see the total there is what about 305,943. Then now we have to raise intersegment revenue in order to get the revenue from third parties. So you raise intersegment, so which means that this intersegment revenue is included under the total revenue. So you raise in order to get the revenue you created from outside the organization. So that is a you raise intersegment revenue. So intersegment revenue, here we have dash. We have 7465. We have 36,791. We have 56, 36, that is dash, then this is 56,63. Now in order to get the totals, remember that this one you subtract. So you take 74,65 plus 36,791 plus 56,63. So we have 49,919. So 49,919. So you get now revenue from third party on sale to third parties. Revenue on sale to third party. So the first one is 129,842. Then the second one is 66,853 minus 74,65. So that is 59,388. And this one is 32,306. Then the next one is 39,495 minus 36,791. That is 27,04. We have 37,447 minus 56,63. So this is 31,784. And now finally we have 305,943 minus 49,919. So we have 256,024. So then now we talk about profit, which is all about intersegment profit. We can talk about that. So we talk about operating profit. The next part is operating profit. So operating profit. So operating profit, we start from the total profit. So profit, so that is segment profit. So segment profit. So segment profit on that scenario, you can see you are given operating profit of 68,87. On that equation, we have 47,16. Then we have 12,83. Then we have 11,69. We have 32,84. So that is a 68,87 plus 47,16 plus 12,83 plus 11,69 plus 22,84. So that is 17,339. So now you raise intersegment profit. So you can see that note 3, they said intersegment profit amounted to 4,223,000. So you raise intersegment profit. Intersegment profit. They just mentioned that intersegment profit is this figure, which means that it was not specific to certain segments. So what we do, we just subtract under the total. So this one goes to the column of the total there because it is not specific to any segment. So once we subtract, you know that the answer I'm getting down here is all about profit on sale to third party. So if I take 17,339 minus the intersegment 42,423, that is 42,23, I'm getting 13,116. So which means that this is all about the profit on sale. This is the profit on sale to third parties. So continuation on this side, we talk about other items if they are present, which I don't see if there are any other items which are present. So since we don't have any other items, because these are concerning incomes and expenses, so we can continue with the, so we have retail catering, we have manufacturing, publishing, and we have others, then we have total. So I could have considered other items. You know that other items, these are incomes or expenses. So if they are specific to any segment, you consider that. If they go to the total, you take them to the total part of it. So if they are specific to any segment, you record them there. If they are not specific to any segment, you consider them under the column of total. So there was no another items, which is incomes and expenses, under the additional information, the information we have. So the next thing I will go to record is all about segment asset. So segment asset. So under segment asset, remember that we have to check identifiable. We have to record identifiable. Like now here we have 50, 152. We have 45, The next column we have 45, 145. We have 24, 165. That is 24, 165. Then we have 14, 14, 165. Then here we have 23, 23, 8, 29. So the total we just add then record there. Then we have unallocated. We have unallocated. So the unallocated goes to the total. So let us add for the identifiable. Identifiable was 50, 152 plus 45, 145 plus 24, 620 plus 14, 165 plus 23, 829. So that is okay. So this one is supposed to be 157. The one for identifiable asset, 157, 911. Then unallocated is 764. Because now unallocated is the one they say investment in associate. So that one doesn't go to any specific segment. So you record is it was not specific to any segment, so it is unallocated. So you add 764. So this is 158, 675, 75. So about the liabilities, you do the same. You check identifiable. So assets, so segment assets. Then we talk about segment liabilities. So segment liabilities. So under segment liabilities, you talk of identifiable. So the identifiable ones. So the identifiable are 14, 839. We have 97, 83. We have 3609. We have 4704. Then we have 34, 175, 175. Then you add, you record total. Then for unallocated, there was no unallocated. So if there was an unallocated, you record under the column of the total so that you have the total figure down there. So that is how you do the segmental report. It's an easy thing. It's an easy question. It's a very easy question. So assignment for you guys, you can go and try December 2014. December 2014, question 4. December 2014, question 4. Question 4C. You can also try May 2015. May 2015, question 4B. Question 4B. That is the case. So in case of any question, in case of any clarification, what you are not understanding, you can ask, then we can correct a day, I think, because now time is not on our side. It's around 1:11. Yes, Dennis?
I think 1 day per week is not enough.
So I can plan for another one.
But not on Thursday. Not on Thursday. Thursday we have a AFM. You can organize for another one. My opinion.
It's okay. Maybe it can be. We will arrange and
Either Tuesday, Wednesday there in the evening. I think it will be okay.
I think 7:30 there.
It is okay. Or 8. It's okay.
Oh. So Michael, then the use of techno. You can mention something as we finish. It's your time. Yes, Michael? The one who is using techno, unmute yourself.
Yes, yes.
Yes. You have said?
Hello? Hello, hello.
Yes, I'm getting you. Just continue.
It's okay, we can continue.
So we can call it a day. We can call it a day. You can call it a day. So guys, you do the assignment so that we meet next time. We also do other topics. So we will arrange on.
I said it's okay, we can continue.
It's okay. So that is the end of today's class. Anyway, that is the end of today's class. We meet next time. So have a nice weekend.